You simply cannot ignore such low valuations, and the banks she feels are a bargain right now. Todd, you first. Why don't you like the banks right here?
Look, several hurdles right now, Bill. I mean, first of all, you can look at the regulatory moment that we have. I mean, clearly, Jamie Dimon's come right out and said the Dick Durbin Amendment's going to cost his bank $650 million to that bottom line. So you start thinking about just the bullseye that's on the back of those bulge bracket banks. Then you can look at the slowdown of the U.S. economy as well as the overall global economy. And then Europe, don't forget that, those pigs countries. $500 billion in sovereign debt is actually held by the money center banks in New York. You want to stay far away from those big bulge bracket banks right now.
Well, what about, MJ, why are you so bullish? We know all the negatives that Todd's bringing up. These are real issues. Why would you want to be buying into this group now?
Right. The main issue is that contrarianism pays here. All that has been brought up here is largely in the rearview mirror, just like those Moody's downgrades, which were widely anticipated and reflected the conditions that existed well before the banks really took major strides to improving credit quality in the capital position. And I think we're sitting probably at a very critical juncture. I mean, there are signs that the U.S. economy is improving. The Eurozone is really at a tipping point, and we've got the EU meeting next week. There's going to be a break. All the news right now is very negative and already embedded in stock prices.
Todd, don't you think that a lot of the fears that you itemized are already in the stocks, A, and B, you get a dividend if you buy many of these right now that it pays you to hang on to these stocks? What about that?
No way, Bill. Look, you talk about the dividend. I mean, we're talking about January 1st right now. You might see a hike in that dividend rate tax. So why would you buy a dividend? Why would you buy a stock just for the dividend right now? It doesn't make a lot of sense. And then moving forward, look, MJ's talking about this economy is moderating or improving. It is hardly from that. Look, this thing is going south. Everybody knows that we are destined for a recession. That's a big reason why you want to stay away from these banks. And don't forget the American household. First time in 3 years right now, they're taking on more debt than they have in income. They don't have the money to spend. They obviously aren't borrowing. Stay away from the banks.
And MJ, you're on the other side of that trade, saying that you could get an average 15 to 20% move in these stocks by year end?
Yeah, easily.
Which one?
You've gotten about, I'd say, almost 15% improvement in the European bank index from its lows in March. These stocks are down 20 and in some cases 30% in a very short period of time. You can definitely see that kind of a bounce back. You know, we're looking at things like rail car loadings, the PMI numbers that look like they could bottom next month, looking at where junk bond yields have come back to. Housing prices are starting to increase, and we've got record mortgage lows. You know.
On and on. You got the positives you're looking at, and Todd, you're not
Todd,
buying this.
You're rolling your eyes.
So Todd, wait a minute. What has to happen then to turn you positive on this group, Todd?
Well, look, I really wanted to hear from Chairman Bernanke to come out with a shock and awe type of QE program. He clearly didn't do that. He's not going to do it for the rest of the year because he can't because of the political problems, obviously. So moving forward right now, you have a U.S. economy that's destined for a recession, a global economy that continues to slow down, and Europe, that's a ticking time bomb. I see nothing out there as far as a bullish catalyst right now to actually invest in any of these banks.
And MJ, what would start to worry you about these? What would have to change?
Yeah, you know, Europe is at a tipping point, and you know there is a chance that you know the euro breaks up and that those economies go from the kind of tailspin that they're in now to a death spiral. We just don't think that that's going to happen.
All right.
Oh, it's going to happen.
Thank you both of you, with your resolve on a good discussion. Thank you for joining us today.
All right, we've got 25 minutes before the closing bell sounds for the day, for the week. This market still strong, up 64 points off of the highs, but certainly holding on to a gain going into the close.
And I think it's pretty clear this market clearly wants more action from the Federal Reserve. But are investors actually doing something that makes it less likely the Fed will help out? This you're going to want to hear coming up in just a moment.
And then after the bell, the case for reverse mortgages. Somebody here will make it, but he's got a tough sell. We'll have the debate coming up. Stay with us.
But first, before we go to break, the dividend. Which beer maker stock is this year's outperforming?